In a widely expected move, Chair of the Federal Reserve Janet Yellen announced interest rates would go up by 1/4%, setting the rate at 3/4%. That makes borrowing more expensive for U.S. consumers, but it also strengthens the dollar. That could help established economies in Europe and Asia by weakening their currency and increasing their exports. But it could also hurt developing economies as investors move their money back to U.S. bonds. And economists say it has the potential to impact the price you pay for most goods. But this time, it probably won't.
It has effects on global commodity prices, which tend to be priced in dollars. And when dollars become more valuable, when they're pushed up in value, it tends to depress commodity prices. That would be true of energy as well as foodstuffs and all across the commodity space. That being said, it'd be very hard put to find a market in which this decision was not already priced.
The increase was expected, but the Federal Reserve did make one change, promising a bigger increase next year by another 0.75% in hopes of keeping inflation low. She said it isn't a reaction to President-elect Donald Trump's policies, but she took the unusual step of urging him against keeping one of his promises to dismantle the financial safeguards put in place after the U.S. housing bubble burst, causing a global financial crisis.
This is progress. I would say it's very important not to roll back. There may be some changes.
Trump says he is going to make big changes. He says he'll improve the economy. As he takes over, the message from the Federal Reserve, right now, the U.S. economy is doing very well. Patty Culhane, Al Jazeera, Washington.